Oh, baby. That's right, folks. Tesla earnings. We're going in on this one, okay? I hope you're excited. We always look at Tesla earnings, and this one caused a little bit of volatility in the after hours. And again, I mentioned this with Microsoft. This is kind of at a point where the market is so volatile, I don't really believe that earnings have much of a play in the reaction of the stock in after hours trading. I really don't. So let's just lay that out there. But the first initial reaction, a little bit positive. Then we went massively negative, down 5+%. Then we reacted very positively, ended up around 5% up. And then leveled out around 0.5% down. So it's a very just strange thing going on here. Reactions are just positive and negative all over the place. You never know who's buying, who's selling. It's just crazy stuff. We'll take a peek at these earnings. One thing you have to preface is it's been somewhat of a rough year for Tesla, right? Only up, which seems crazy, but it's Tesla, so only up 8.48 last year. Trailed the market. It's kind of wild. This is a stock that trailed the market. Typically never does. But you look year to date, and it's been really horrific when you see since the start of the year, where we've ended up down 21.8% so far. And really, if you talk about what today looks like so far, over 22% down in the span of a month is pretty darn rough. So let's just keep that into consideration. It's been a rough going the last month, really, for Tesla. So, I mean, yeah, pretty rough going. What can I say? So if we look at these earnings, one thing, if we look at the past, we look at my earnings video, I predicted $1 billion beat based on the fact that they released their vehicle delivery numbers beforehand, right? And that's a big help. And if you understand what average selling price typically looks like for them, you can go ahead and calculate most of that in your head. The only exception is going to be what you can see from solar and the insurance piece of the business too in terms of revenue. But we were able to calculate a $1 billion beat over the analyst estimates. So let's be clear, even if it's $1 billion beat, I'm not going to be the most shocked in the world, because of the fact that it was just, it was simple math, folks. We could do this by ourselves. We don't need any analysts around here because they're bums. We can do the math ourselves if we use our brains. And you look, and what a shocker, baby. This is a great quarter for Tesla. Q4 non-GAAP EPS of $2.54 beats by 16 cents. Great for the profitability standpoint. They've been growing by really tremendous levels, and I wasn't necessarily sure on the profitability aspect what to look at. So I'm glad to see there was a beat there. From the revenue perspective, $17.72 billion. It's a beat by, that's right, $1.08 billion. We knew this was happening, okay? We knew it was happening. 65% year over year. Great stuff. I mean, that's still great revenue growth. Massive growth if we're being honest with each other. So it's good that they're able to continue to do that. Absolutely. Automotive gross margin was a little bit better quarter over quarter. Nothing crazy, 30.6 to a 30.5. Still better when you talk about profitability and how they've been able to grow that from really a negative line a couple of years ago. It's pretty impressive. CAPEX came in at 1.81, a little bit below Q3. Free cash flow, though, quite a bit above Q3, twice as much in Q4 here, $2.78 billion compared to $1.33 billion. Quite a good free cash flow line for them. They don't typically post those kind of numbers. So let's take a look at the delivery, or really the full year update here. Oh, that was good. You don't even understand how good of a crack that was. If I could have done that right into the microphone, you would have heard basically the earth shatter is what it sounded like. It felt like an earthquake in my neck, and it was fantastic. $1.5 billion increase to the cash position is what they're touting here for Q4. Very nice to see that. From a profitability standpoint, $2.3 billion in net income. Very, very nice to see that. I mean, it's crazy how they've been able to grow that. Very nice for them. So, very nice. Record vehicle deliveries of 0.94 million. It's a weird way to put it. I mean, I guess it's a shorter way to put it, but still very strange. Normally, you'd at least want a 1 in that first place there. Yeah. Annualized vehicle production run rate of 1.22 million in Q4. So they're building vehicles. They're getting ready for the future for them. Pretty exciting stuff. Over on the right here, nothing, crazy here. They're just talking up the business. Deliveries up 87%, as you can see, which we'll see that also in the future. For the full year, $5.5 billion of GAAP net income. Quite significant. Full self-driving software remains one of the primary areas of focus, as they will mention too, because that's where they really want to get to. They want to be the first doing it at a massive scale. And really they kind of are, but here's a good line here, the automotive revenues. You can see quarter by quarter how it's looking for them, and it's continuous growth really, and 71% growth year over year in automotive revenues. Pretty nice to see that. Hey, I'm not going to say that I said $16 billion was going to be the automotive revenues. I'm not going to say I said it, but I may have said it. Okay, I may have literally said $16 billion. But that's okay. Look. Ooh. I'm just saying that's one that I'm going to take to the house, baby. And then you see total revenues here. They added an additional $1.7 billion in other revenues. So that's exciting for them. We'll see that breakdown just a little bit as well. EPS, you can see the continuous growth there, 754% growth. Pretty significant there. Pretty significant. And net income also up 760%. So very significant line for them. We don't care about the this is by year. Very nice to see. Full years here, 73% growth. I mean, this is just significant stuff here. When you look year over year, and even through the past there, they have grown this year, 2021, by significantly more than they've been growing the years prior. So pretty significant year for them, and total revenues up 71 as well. Very nice to see. And here is where you get a good picture here. This is what I like to show, is this net loss line. You see a huge $2 billion loss in 2017, $1 billion in 2018, nearly $1 billion in 2019. Then we break even in 2020, $721 million in the positive, and then this year $5.5 billion net income. It seems almost impossible that they're able to do that, frankly, but what can I say? 665%. Thank goodness it's not the line under it. I would have changed your EPS line by at least 1 cent so you could have avoided that percentage gain. But look, Tesla's demonic, and that's on them, I guess. I didn't know that they were. I didn't know they were a Satanist colony, but they could be. They are currently based out of California, so I'm not going to say anything, but not looking good for you, folks. Not looking good. Impacted by the following items. What a shocker. Growth in this is the most basic crap I've ever seen in my life. Total revenue growth was impacted by growth in vehicle deliveries, growth in other parts of the business. What else was it going to be impacted by? What is that supposed to mean? That's the dumbest thing I've seen in my life. Oh gosh, that's crazy. I think that's pretty funny. What kind of lines can we look at here? Don't mind it. We just woke up, folks. Total production up 70%. You see a decrease in the S and X as more people are turning to 3 and the Model Y. 79% growth there. That's kind of how it goes. I mean, it is crazy that this company's got one model. Technically 2 models, I guess, that are doing well. And we see really declines in the other one so far, but it's okay. It's weird for a car company to have 2 models only. It's just crazy. 2 models that are actually selling. Seems just crazy to me. Maybe I'm the crazy one. Good production there. Deliveries in the same boat. They're producing definitely more Model S's than they're selling here for this quarter. 11.7, only down 38% in the deliveries of the Model S. Not wonderful for them. The Model 3 and Model Y up to 84% of deliveries. Pretty significant. If you look at the solar business, again, this isn't a massive line here ever. Down 1%. Look, people that talk about solar and how massive it is for this company, it's not. I mean, it's just, I'm sorry, it's not. You see a decrease year over year. And storage deployed for solar down 38%. Solar's not a massive business. Sorry. I'm sorry. Mobile service fleet, this is pretty nice. The autonomous taxi, an electric taxi services here, up 43%. Again, that's going to be quite a number of their business, as well as the charging stations for Tesla. This is where it's going to be. 35% growth in the supercharger connectors and 36% in the supercharging stations. This is going to be where a lot of the revenue comes in the future, as there's just not enough charging stations still out there to really justify an electric vehicle if you live in more urban environments. You just don't have anywhere to charge. So they're going to have to work on expanding that, and as they do, obviously that'll boost their revenues. People are purchasing those, so excited to see that. For the full year, again, as you saw, 930,000 produced, 936,000 delivered, up 87%. Good to see that. It's good to see it. Good to see it. Here they're talking about vehicle capacity. Again, not quite ready in Berlin and Texas, but Texas, we're almost there, where they're going to be delivering the Cybertruck, which they've kind of delayed just a little bit, but that's okay. The Model Y is where we get a little more significant. They're in equipment testing phase in Berlin and Texas. And then we have a to-be-determined factory here where they're going to be building the Semi, the Roadster, and a quote-unquote future project. I don't know. Fun for them. But this is a massive part of the business, too. If they can get the semis coming first and they can partner with the big retailers, Tesla semis, it's got to be huge. It's got to be huge. So, and nothing else crazy. This is just them selling the business there. Just selling the business. Nothing wild. Photos. Oh yeah, look at them in the Fremont Factory. This guy's like, he's sticking his head through the windshield. That car's too small, man. How are you gonna drive in that thing? That's a car for a short person. I mean, I think that's the proper term. I don't think I can say the other one. Look at the Gigafactory in Berlin. Why does this exist? I don't know what this archway is, but it looks cool at least. So that's fun. But look at them going. Look at the body shop in Berlin putting together these vehicles here. General Assembly, good stuff. You know, that's fantastic. And oh yeah, now we get into Texas. This thing has progressed significantly. Look at how freaking massive this building is too, by the way. And that's right, they're rolling in Texas. They're testing these parts and seeing what they can do. Model Ys abound. Look at the Model Ys. Look at them paint. Just look at them painting. Look at these robots doing some painting. Have you ever seen them? I mean, they're just painting. Attaching seats to structural battery pack. Look at these guys do this. Look at them attach the seats. Again, look at the freaking massive building here. Look at this. Shanghai. Holy crap, that's a massive factory. It's a massive factory. And the Tesla Semi, those are not real viable units yet, so let's not pull a Nikola, please. Cumulative profit since inception. This is one thing they're going to be very excited about showing now, as you're going to see this line continue to increase significantly. You saw it going in the downtrend, and that's where a lot of people, including myself, were a little bit against this company, right? We were a little bit bearish, but they've actually turned positive now, lifetime. And good for them. Really good for them. Vehicle deliveries on the way up. Net income on the way up. Great stuff to see. These are all charts that are very positive for them. Trailing 12 month looks fantastic. Financial statements, we love looking at the balance sheet. It's a little bit smaller for Tesla because they add all these dang lines here, but we like to look at the far left line the Bernie Sanders line and the far right line, otherwise known as the Richard Spencer line. So total current assets here, as highlighted, $26.7 billion was last year's line, and this year's sitting at 27.1. So an increase there, and you saw, as they mentioned, a little bit in the cash position, right? A little bit of an increase there, but not quite the same year over year. A little bit of a decrease there, actually, year over year. But since Q1, 2, and 3 were a little bit lower, they've really boosted that to over those Q1 levels. So total assets in general at 52.1 compared to, is where we sat a year ago, now sitting at 62.1. So a $10 billion increase there in the asset line. Good to see. Part of it, you can see in this property line, obviously, not a shocker with the developing properties, where you're going to see that increase. So in the digital assets, actually, you see an increase there as well. So that's something to think about. Digital assets, good for them. Total liabilities sitting at 28.4 last year, now at 30.5. So they increased it, but not nearly as much as they increased the assets by. So overall, that's nice. The stockholder equity line, as highlighted, has increased quite a bit. 22.2 the year prior, now sitting at 30.1. It's actually in pretty good shape. The balance sheet's looking pretty good. It's looking really good if we're being all things considered. So let's keep that in mind when we look at the stock. Now, this is still a company trading at a ridiculous PE ratio. Ridiculously high PE ratio. Even after this last bout here, earnings will help it quite a bit. But PE ratio sitting over 300 currently. This quarter will help it decrease, actually closer to 100, I think. When you look all things considered, but it's mighty pricey. It's mighty pricey. And a market cap just under $1 trillion. Now that's where I think this thing gets a little bit expensive. Oops, that's just the general page. And why do I say that? Well, we look over the full year. We'll scroll back up to the full year. And I'll show you why I think it's a little expensive. We're getting there. Don't worry. We're able to do this. So for the full year, $47.2 billion, right? Or 53.8, I guess, if you look at the full year. And that's relatively expensive when you're talking about a market cap of nearly $1 trillion, right? It's relatively expensive. We're talking about 20 times that value there. 20 times the revenue for the market cap, but this is also a company growing at pretty high levels. So you have to look at yourself and say, is that worth it to you? There's a lot of positives with the company. Obviously, they're going to be a staple in the electric vehicle business. But you must also consider when more competition comes into play, they're going to be losing market share. They are, unfortunately, because people will be going to brands that, if they haven't got an electric vehicle yet, people are going to be going to the brands they trust before they go to a Tesla. I hate to say it, but that's just how people are with brand loyalty. I could not give a crap about brand loyalty, but a lot of people are. People fall for marketing schemes all the time. And guess what? Tesla doesn't do marketing, so I thought it's mighty impressive with their business too. But yeah, I'll leave it up to you what you think. Personally, I think the EV sector is way oversold in the last month. But there's going to be a lot of market volatility still this entire year. Just laying that one out there. And the EV segment and those hyper-growth companies are still going to be paying for it, unfortunately. Long term, I like it. I do. But for the short term, I might not be into this one. But keep it up to yourself. Let's see what you think, baby.